I hate to say it, but the situation for the largest buyer of Bitcoin, MicroStrategy, went from bad to worse. This here is STRC, the preferred equity instrument by MicroStrategy. It's supposed to trade at $100, but then suddenly it depegged and crashed all the way to 73 cents on the dollar. And that was because Saylor started to sell a little bit of Bitcoin, 32 Bitcoin, to fund the dividends on this instrument. So this made clear that MicroStrategy is in a way running a Ponzi scheme. It's getting capital from new investors, takes that capital and then sells out dividends with the exact same pool of capital with the Bitcoin. Now it appears as if the situation is actually improving. We are getting closer to the peg. However, this is the headlines and I am not a headline reader, but this matters. Saylor is now raising more than $200 million and is selling way more Bitcoin. In May, it was only 32 Bitcoin. It was just a foreshadowing of what happened in July. 3,588 BTC got sold. This situation escalated quickly. Saylor told us to never sell our Bitcoin, and now he's selling Bitcoin himself. Now the whole construct is quite complex because there are several instruments, there are several ways how money can flow in and out of the system. But really what you need to know is that Saylor sold some MSTR stock in the past to raise a cash reserve to pay out the dividends on this instrument. And now he's announced that he's preparing to potentially sell more BTC to increase that US dollar reserve. The hard asset is sold for the weak asset. This is very much against Saylor's philosophy. But why is this happening? It's happening for several reasons. The market value to net asset value is only at 1.05. So that means the company is only valued 5% above the value of its Bitcoin holdings. There's a very small premium, and that's according to the official numbers. And this is what this whole system is built on, right? The company is very expensive, can sell equity, and then buys Bitcoin with that equity. It monetizes the premium, which is disappearing. Now that's according to the official numbers. And those official numbers for the very first time actually turned negative. Now they have slightly recovered. But the unofficial numbers, when we actually look at all the potential dilution with the preferred instruments, they are worse. For example, according to BitBo, the Mnav is already at 0.82. Whenever Saylor decides to sell common stock to buy Bitcoin with the proceeds, he is now burning 18% on the capital. It's a great strategy as long as the Mnav is positive. It's a not so great strategy when we get into the negatives. And even the official numbers, right, with a premium of 5%, they're not pretty either. This here is now MicroStrategy stock relative to the Bitcoin price. So you can see how volatile MicroStrategy stock relatively speaking is. And this vertical line, that's when MicroStrategy started to buy Bitcoin. And this horizontal line, that's when the Mnav turns negative, even according to Saylor's numbers. The company is in no business to buy Bitcoin when we fall below this. So then no common stock can be issued. And also purchases through the preferred debt instrument are impossible as well. They would burn money as well because we are below 100. And so the reason why Saylor is selling Bitcoin now is to try to prop up those instruments, right? If STRC is back to $100, then he would be able to buy Bitcoin again. If MSTR would suddenly be the higher value relative to its Bitcoin holdings, it could again sell shares. The idea is to stabilize the entire system. But that's not so easy when confidence has already crashed. It's very hard to recover from an incident like this. Have a look at MSTR stock, that's in green, versus the Bitcoin price in orange. We clearly have much more volatility in MSTR. For example, during the bull run, MSTR appreciated by more than 3,600%, while Bitcoin, it stopped much earlier, just a few 100%. The problem is that all of this additional volatility does not return adequately. Yes, there's still a slight edge versus buying and holding Bitcoin. But when you're buying in that much additional risk in your portfolio, don't you want to have much more additional return? If you are okay with all of that volatility, you could have just bought plain Bitcoin on a 2x leverage. You could have just taken out a personal loan and buy maybe double the amount of Bitcoin that you'd otherwise buy. Bitcoin, since Michael Saylor started to buy the asset, appreciated by roughly 500%. It went from $10,000 to $60,000. With a 2x leverage, that would mean a 10x, right? We would then have 1,000% in return. But MSTR did not make 1,000% return. It outperformed Bitcoin only slightly, and it was more volatile than is simply 2x on top of BTC. Another way to look at this is the maximum drawdown from the all-time high. So what we've got at this orange line, that's the Bitcoin drawdown, the maximum BTC drawdown from the all-time high. That went to minus 76%. So that's a drop from 67K down to 16K. Then Bitcoin recovered and now it's down again, roughly 50% from the all-time high. Now compare this with MicroStrategy. MicroStrategy had always been more volatile. That's to be expected. But last time, when Bitcoin fell by 50%, MicroStrategy only fell by maybe 65%. This time though, it's down by 85%. In other words, MicroStrategy stock is now much more sensitive to a bear market than it used to be. MSTR is much more levered right now. And the problem is that the addition of that leverage happens exactly at the wrong point in time. As retail investors, we actually have an advantage here because we can buy the bottom. If we have crashed in Bitcoin, we can just buy more Bitcoin. But if we have a company that just levers up the Bitcoin and that uses the current Bitcoin holdings to add more leverage, that additional leverage can only be added when the value of the Bitcoin holdings is high. As in, you can only borrow against your house when the house has a lot of value. You can't really borrow additional money against this if your equity relative to the value of the house isn't that high. You need to have a lot of equity. You need to have a high house valuation in order to borrow against this. Consequently, Michael Saylor needs to have a high Bitcoin valuation in order to borrow against that and buy more BTC. And so that is exactly what he has done. He bought most Bitcoin when the price of BTC was at an all-time high. And he bought barely any Bitcoin when we were in a bear market. He's buying high and he's trying not to sell as we go down. But we can see that that attempt is now failing. He has to at least partially sell as we go down. He has over-levered his position. And Michael Saylor should have expected a drawdown like this. Because really, the current decline in the Bitcoin price, 50% from the all-time high, is nothing out of the ordinary. Every single time, we tended to fall below the realized price, roughly 10 to 20% before we turned around with a bear market. Now we are at a realized price of 53K. Bitcoin could easily fall into the 40 somethings. And the big question is, will then Michael Saylor sell even more aggressively? And if the answer is yes, we might have the Black Swan event of this market. We always had a Black Swan event. We had Mt. Gox and Silk Road in 2024. We had the ICO bubble burst with the subsequent minor capitulation. Then we had Terra Luna, Three Arrows Capital, FTX. But we haven't seen anything systemic collapsing in this bear market. And while MicroStrategy might not collapse because he's now taking cautionary measures against a further decline of the Bitcoin price, seeing the company moving from a net buyer to a net seller does have implications. People are front-running future sales by the treasury companies. Michael Saylor is buying that aggressively at the all-time highs of Bitcoin that he's now in net unrealized losses. His average cost basis is $75,000 per Bitcoin, and we are currently below that. Now think about this. What investor do you know that's in net unrealized losses after an asset has appreciated by 6x, right? From $10,000 to $60,000. Yet you're taking on that much risk that with a drawdown, you're suddenly in net unrealized losses. Your average cost basis is below the current price, even after we have 6x'd. That's exactly what Michael Saylor has done. He has bought the top aggressively. And now he's sweating bullets. He has to do the thing he definitely does not want to do. But he's incentivized to do it. Because probably he knows as well that the Mnav that's posted on the website is not real. He probably also calculates with numbers that are below 1 in Mnav. And that then incentivizes the company to sell the comparatively expensive asset, Bitcoin, and then buy back the stock, buy back the STRC, etc. Now the situation is very complex, but it's worth understanding. This video is just an introduction. I actually wrote a report on this. Check out the link in the pinned comment down below. This free 10-page report has all of the information. How much runway does Michael Saylor have? How many US dollar reserves? When does he have to sell more Bitcoin? How much Bitcoin does he have to sell? What kind of impact does this have on the market? All of this is explained in this report. It's 100% free and you can get it either via Telegram, so you can click on the button, or you can scan the code, or you can also get it sent via email. Just plug in your email. Again, this link is down below. It's 100% free, no payment is needed, and no credit card is needed. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.